You are watching Market Watch, the brief overview of the key events from the world of finance. Global markets continue to be volatile amidst growing concerns of a recession and escalating trade disputes between the US and China. Investors are increasingly hedging risks, shifting to defensive assets. Pressure on the dollar has increased following weak economic data from the US and statements about potential easing measures from the federal US Treasury yields have sharply dropped, and stock markets are experiencing significant sell-offs, particularly in the tech sector. The outlook for global slowdown is leading to expectations of earlier interest rate cuts. According to Goldman Sachs analysts, the probability of a recession in the U.S. economy within the next year has risen from 35% to 45%. This revision is linked to the deterioration of financial conditions, rising political uncertainty, and a decrease in business investments. These factors could significantly affect GDP growth rates. Meanwhile, JP Morgan and other major market players have also raised their recession forecasts, suggesting a higher likelihood of recession both in the U.S. and globally. Financial markets are already pricing in this scenario. Oil is also showing negative dynamics, reflecting concerns from investors about the potential consequences of a trade war. WTI is trading around $60. The main triggers for this are concerns about slowing global economic growth and an increase in supply from OPEC+. Additionally, demand prospects are deteriorating due to declining industrial activity in key importing countries. These factors are putting further pressure on oil prices, increasing volatility in the commodity markets. Analysts are already revising their long-term price forecasts downward. Amid the collapse of Asian and U.S. stock markets, Bitcoin is showing relative stability. Despite the market downturn, its price has dropped to the lows seen in March, yet it continues to hold above $75,000. Investors are increasingly viewing Bitcoin as an alternative to traditional assets in times of global instability. The decline in Treasury yields and growing expectations of dovish monetary policy from the Fed are supporting interest in digital assets. Additionally, cryptocurrencies are becoming an attractive tool for protecting against inflation and geopolitical risks, especially in a weak dollar environment and commodity market instability. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.